I'm going to invite Hamish Douglass from Magellan and Tony Boyd from the Australian Financial Review up on stage for an in conversation. And just a quirky fact about both of them, just as we're setting up. Now with Hamish, I was intrigued to know that when he was younger, he was terrified of public speaking. Well, I have to say, I'm not sure when you had that fear, but you certainly haven't got it these days. And we'll be hearing about that shortly. Now with Tony, this is a fascinating one. Tony was an Ethiopian soldier in the first large-scale production of Verdi's Aida at the Sydney Opera House in 1975. It was a very high-paying job, I've been told, thanks to actor equities penalty rates. I hope they're paying you a bit better at the AFR these days, Tony. Tony qualified for the job, along with 30 others, because of the quality of his marching on B Company in the Waverley College Cadet Unit. His unit was the only one with red berets, which encouraged esprit de corps. So please welcome Hamish and Tony to the stage.
Well, Hamish, thank you for coming today. I know someone with a business as large as yours, with the global scale. I think, is it 60 billion under management now?
It's a little larger than that, but we
won't dispute the billions.
In US dollars, it's about right.
Great. Okay, well, for those in the audience want to do an exchange rate, that's we're getting up around 80, 90. But I thought I'd start by asking you, there's a lot of things going on at the moment. We've got the trade war between the US and China. We've got market volatility. We've got Brexit. We've got the Donald. He might be on Twitter now or possibly at 2 a.m. this morning, who knows. But what's on your mind? How are you reading the situation at the moment?
Yeah, well, there's obviously a lot of noise going on, and as an investor, you have to kind of distinguish between the noise and what's really relevant. And I would say, you know, we have Brexit and we've got a lot going on in Europe. We've got tweets happening every moment in the United States. So how do you distinguish between this and what's really going to drive markets and drive economies? I'd say there's two big things on our minds, Tony. The first, I would say, is the trade dispute with the United States and China. And you have to make an assessment of whether or not there's going to be deal or no deal, because underlying this is a very, very deep strategic issue between the nations. We've now got a very large emerging nation who is challenging the United States for economic supremacy in the world and military supremacy in the world, and it's never faced a foe like this before. The Soviet Union was never an economic foe, so they sort of fought proxy wars in Afghanistan and Vietnam and other places. But now they've actually got a foe who can challenge them economically. And I actually think Trump isn't right about a lot, but he's actually right about the core issue here. And the core issue is actually they appear to be doing it on unfair terms. They have been stealing intellectual property. They've been requiring foreign companies who come and participate in their massive market to effectively transfer their intellectual capital as a cost of doing business. If they can't get it, they go and steal the technology through their cyber theft. They have massive state-owned enterprises who get huge subsidies, and they use those subsidies for taking market share on a global scale. So that is a very, very real issue, and they're trying to reset that relationship. And China has a plan called Made in 2025 plan that's outlined a list of industries it wants to dominate in the future. And that list of industries is absolutely incredible. It includes autonomous vehicles, artificial intelligence, quantum computing, 3D manufacturing, aircraft, spacecraft. A fascinating one is deep sea space stations. I didn't even know there was such things as deep sea space stations, but I guess if you want to own the moon, you may as well own under and the rest of the planet here. So they've got very big ambitions. But the big question is Trump just doing this for political purposes, or is he doing it because he's really want to reset the relationship? It appeared up until 2 weeks ago, it looked like it was just a deal to be done. and to protect his stock market. It's become a little more uncertain in the last few weeks of whether or not this is actually going to be resolved. We could get into a severe sort of trade war, Cold War environment, or we could actually have it settled. And it is very difficult to know which way this coin's going to flip. The markets are pricing that Trump is going to do a deal with President Xi. That's what the market environment is. Obviously, it got a little bit jittery over the last few weeks, but still the assessment of markets is a deal's going to be done. Our best assessment is that's probably the most likely outcome, but there are political overlays. What is the best thing going into the presidential election in 2020? Maybe a dispute with China and immigration should be the big topics to be fighting, and we're not a socialist country, I'd say it's the third thing. So that whole issue is taking up a lot of our time, and we spend to a lot of experts in Washington and China and other places in assessing what the pulse is at the moment. The second big issue, and I would say this is even a more important issue, is really what's going on with US monetary policy. And the reason it's so important is because when you're an investor, you have to make an assessment about where interest rates are going to be in the future, because risk-free interest rates effectively set the discount rate. Warren Buffett refers to interest rates as the gravity of markets. When interest rates are low, assets are worth more, and when interest rates are high, assets are worth less. And historically, you could normally go to some very liquid bond markets like the US long-term treasuries and the German Bunds, and it would tell you what that risk-free rate was. You'd add a risk premium and you'd use 8 or 9% as your sort of discount rate. And all we had to do was try and forecast the cash flows between now and Judgment Day and discount them back. That's not easy, by the way. But now we've got two moving parts. The market doesn't really know what the discount rate is anymore, because the central banks came in with massive monetary printing exercises known as quantitative easing, and they have taken these rates down in Germany to zero. Do we really think interest rates are going to be zero infinitely? In the United States, long-term rates are 2.5% to 3%. I can tell you, if long-term interest rates are 2.5% to 3%, most equities in the world are currently a bargain. But if they go back to where they were sort of more historically around 5%, most markets are pretty expensive at the moment. So this is why this is such an important topic. And we went into December last year, the US Federal Reserve had a very steady program of increasing interest rates, and they said there'll be more gradual interest rate rises this year, and we were factoring that into our thinking. And in January, they did a backflip and said, well, we're not going to do that anymore. And a big question you have to ask about the future is, what is inflation and growth going to be? Because that's going to factor into this equation. So we spend a lot of time thinking about that in us assessing whether markets and assets are attractively priced or not.
Well, just one question that comes out of your description of what's going on between the United States and China. Yeah. Earlier in the week, the Financial Times raised a question in editorial whether we're going to end up with two separate, I suppose you might call, strategic technological silos in the world. And they're those that are supported by the United States, and then there's those that will be supported by China. Is it going to get to a point, do you think, where investors and countries have to really decide which one they back, or can you back both in the belief that ultimately the most efficient and most, I suppose you'd say, powerful capital investor, which is probably going to be China, will win?
Well, I'm not sure it's determined China's going to win at the moment. Do I agree that we're entering a world with effectively two technology silos in the world? I think that is right. The Chinese internet has the Great Firewall. So you can't actually participate within China as a Western firm if you're in there, and they've banned a lot of players being in that market. And it's a very, very important market, and it's literally a completely separate world. But we've also got a race, I would say, in two very important areas of technology, and it's not autonomous driving. I would say it's a race for quantum computing and also a race for artificial intelligence. And whoever wins the race for quantum computing can effectively decode any cryptography in the world. And that means if you had a nation who actually got a true quantum computer developed for another nation, they could effectively break in and control the whole nuclear arsenal of the other nation. That would actually be quite an advancement into who's more dominant. And if you think about the next phases of artificial intelligence, we've got something known as narrow artificial intelligence. So when you go on your Netflix and you get the films being recommended to you, what you get recommended and I get recommended, you probably have operas being recommended to you by the sound of it.
Verdi's operas are quite good.
That's just artificial intelligence. It's learning what you watch and your habits and knowing things about you. Facebook, which you get in your newsfeed, is forms of narrow artificial intelligence. What the next stage of artificial intelligence is something called artificial general intelligence. And that is some way off in the future, but whichever nation gets there or enterprise who gets there first has such a significant strategic advantage, as in it's astronomical, the advantage that would cause, and there is an arms race. China is putting ridiculous amounts of capital behind quantum computing and artificial intelligence. I think the United States is waking up, but they're putting only $1 billion into quantum computing at the moment. I cannot believe that they are not doing this. And I think they've realised that then in order to get there and the advancements of this, they're sending all their students to American universities and literally sucking out the intellectual capital. And I think they've sort of America's woken up to there's a very, very big game going on here.
Well, I mean, just as way of background, a couple of years ago I interviewed Michael Birchuk, who is at the University of Sydney working on quantum computing, and part of his work is financed by DARPA, which is an American, I suppose, pseudo-military R&D financing arm. So we are partly in the race, even here in Sydney. But just to return to this question of the silos of technology, your top 10 stocks are dominated by technology stocks in America, and the biggest threat that I see to them is regulation. There's a very interesting anecdote. We probably have got time for it. Just before the election, Scott Morrison and several of his cabinet ministers had a meeting with Facebook and Google up in Brisbane, and apparently it was actually toxic in terms of these people from these two technology companies came totally unprepared, and the Prime Minister was absolutely ropeable. And there were some absolute, I think, things that couldn't be repeated in this room. Said to these representatives, you are not taking this seriously. This was in the wake of the terrorist attack in New Zealand. I just wonder, and I only use that as a background to the question, are the companies too arrogant? Are they in a situation where they're going to be either broken up or put in a less favourable commercial position?
Yeah, it's obviously a topic that we spend a lot of time on, and I spend a lot of time in Washington seeing staffers of various senators who are putting proposals up. I'm about to go in a few weeks again to see some more people in Washington. So we're really trying to stay on the pulse of regulation. And you're right, we've got some very big positions in Alphabet and Facebook, which I would say at the front end of this. We've got Microsoft not quite in the same zone, Apple in a slightly different position. So what are the big issues on the regulatory side? And I would say at the end of the day, our Prime Minister may have been a little bit opportunistic about what was going on to want to take some action. This isn't something that gets regulated by opportunistic short-term moves with something going on with Christchurch. There's a whole series of regulatory issues that have to be grappled with. One of them is who is responsible for content on these platforms. At the end of the day, these platforms have billions of users. So there's 2.3 billion monthly active users on Facebook. There's 2 billion users on YouTube. So they're putting up their content on these platforms, hundreds and hundreds of millions of posts a day, if not billions, depending which platform you're on. And therefore, when it gets put up, how do you make the judgment call that what is being put up is a real opinion? This has got free speech and other things into this. The biggest issue we have to think about is whether or not the governments are going to turn these platforms in publishers, that they become totally accountable for what's going on. As far as we see in any jurisdiction, that when they look at it in detail, None of them want to turn them into publishers. When you go at the UK inquiry, when we think about what's going on the ACCC, when it was going on in the United States, but what they want to do is to make them accountable to effectively get really bad content off their platform and do it really quickly and have surveillance technology on their platforms to ensure they're monitoring this. And if they don't have all of that, then make them accountable in terms of criminality or fines. So that's one issue. Election meddling is another issue, and they're spending enormous amounts of money on that. Competition policy. Are they going to break these up, or are they going to put behavioural undertakings like the EU and fine these things where they may be promoting their own services on their platform over third-party services on their platforms? Privacy is a big issue, and obviously the Europe has been leading, has sent a model of something called the General Data Protection Regulation. We think that will get rolled out around the technology companies are pleading with the politicians to regulate them on privacy, and they can't get the politicians to agree with each other to do anything about it, which is staggering. They're actually asking to be regulated, and still they can't do that. And there's another issue about the data that is stored on these platforms, who it belongs to, and whether it is portable or not, and truly allowing the customers to either get their data deleted or could take it to another service. So it's a very complex topic. It's just not one issue. It's a multifaceted issue. I would argue that two of our investments are probably at the pointy end of this, but if you look at something like Facebook, the Facebook business is one of the most incredible businesses of the 21st century. It is growing at 30% a year, its core sort of Facebook advertising business, but they have a whole series of other businesses that haven't even been monetized. They've got their messaging platforms, which is WhatsApp, Facebook Messenger, and the Instagram messaging platform. 2.7 billion users, and they're currently not earning any revenue for that. And I'll tell you, they'll earn an enormous amount of revenue there. They're now turning their Instagram business into a commerce business where you can do in-app, inside the app, direct purchases for goods that you see, you can tap on, see something wearing, and purchase, and they're running that. So not just advertising, but a transaction commerce business, and a massive video advertising business, which is coming out of the Facebook business. There's $225 billion of advertising revenue on television and pay television, ex-China in the world, and there is a massive shift of viewership away from traditional forms of entertainment, as we know, with a Netflix, and there are going to be very, very few players who collect most of that advertising revenue. And I'd argue that YouTube, which is owned by Alphabet, and Facebook, which is developing, they have within 18 months of developing something called Facebook Watch, which is the video tab, they've got over now 100 million users in 18 months watching over 1 hour a day of video on that platform, which is now starting getting advertisements. Netflix, which is worth $160 billion, has 130 million users.
That's fantastic.
So all we say is these businesses are incredible. The regulation you have to watch out for. We're there because we know the businesses are fantastic. We're wary about the regulation.
We've just been told we've got 5 minutes left, but I thought, first of all, on Facebook, we'd take that as a stock tip, I think. I bought the stock at 210 several years ago and then sold out at 270. I noticed how Warren Buffett got in at 190, much smarter man than me. But I wonder if you could just comment on a paradox before I ask the room for questions that I see at the heart of this whole technology thing. The Chinese want to get access to American capital markets. So I was told by someone at Morgan Stanley the other day that there's a big pipeline of Chinese tech companies wanting to come to America, like Alibaba did, and list there and get all the advantages that go with that. Are you at all interested in those types of opportunities, or is China for you just too risky because of these geopolitical developments?
Well, let's start at China. If you have a look at the emergence of the purchasing power of their middle class, it's probably got 300 million consumers in their middle class. There's forecasts from McKinsey and others of 600 million within 5 years. Even if that happens in 10 years, you're talking between 7 and 15% growth per annum in the size of their middle class. The size of their middle class is going to be twice the population of the United States of America. And the effect of that, if you can participate in that consumption, is incredible. We're primarily there through US-owned entities, but we're cautious that the US and China are in this Cold War potentially that isn't going to go away. Even if they settle this trade dispute, these tensions are not going to disappear. So we're thinking about how we can access that Chinese middle-class consumption story, which is a scale the world has not seen. And is going to grow for 20, 30 years. This is a very, very long-term thing. So how do you participate in that beyond what we're doing in owning something like a Starbucks or an Apple or a Yum Brands or McDonald's or something? If you could buy Nike, who's got a very large presence there as well. But there are other businesses. Luxury goods is a very interesting area. So much of the growth in luxury is coming through China. Now, but there are some very large Chinese direct businesses who have fabulous businesses that we would buy, and they are listed and owned in China. You've asked the question about Chinese tech. I don't want to get into the individual names. Yes, there are a number of the Chinese tech we would buy. They've got structures that are not ideal. They're set up as foreign investment vehicles through something called VIE structures, but they don't actually own the business. The business is typically owned by a bunch of individuals, and the structures are technically illegal in China. Which adds to a risk. We're not saying that risk is, but there is potentially a higher risk there. It all comes down to valuation to us and how to participate versus. So you ask yourself, would you own a Facebook or would you own a combination, or would you own Tencent, which is kind of a combination of Facebook and a gaming company? You think up the valuation multiples and you think about the opportunities, and we made an assessment we'd prefer to own Facebook at the moment than Tencent. We may be right, we may be wrong, but would I own some of those Chinese tech companies at the right price, taking the risk into account? But I'm probably more interested in that long-term consumption story and how to access that. And there are Chinese, there are European, and there are American great companies who have fabulous positions
in China.
that.
Okay, well look, this is like winning a lottery. There's time for one question from the floor. I won't ask my colleague from the Financial Review. I'll ask someone out there who's, obviously you're all fans of Jeff Wilson, so nobody's excluded. Yes, just down here.
Thanks for the opportunity to ask the question, and Hamish, thanks for your time today. Given where the world is today and we are where we are, in 5 years' time when you're sitting there talking about your past 5 years' performance, what do you think would be a good outcome to be able to report?
I can tell you in 5 years I won't have any more hair. Look, we tend to be very long-term investors in what we do, and I would imagine that many of the investments we have today, a good outcome would be that there's still investments we have today and we have in 5 years. If you think about our investment in Starbucks that we have, it's up 57% or something in the last year since we've bought it. I don't get excited that it's up 57%. So if I think of when we bought our investment in Yum Brands back in 2007, it was $22. Yum Brands is now equivalent with Yum and Yum China, about $140 a share. So I would hope we're on a journey with some of our great investments. We bought Visa Card in 2012. We've made over 7 times our money in Visa Card. We bought Microsoft in 2014. 5 years later, we bought it at $28 a share. We made our largest investment. Today, Microsoft is $130 a share. So I would hope, looking out 5 years, some of these investments and these seeds we've got in the ground today are on their way of what I call the magic of compound interest. Benjamin Franklin, who was one of the founding fathers of the United States, had an incredible quote. He had a quote that said, money makes money, and the money that money makes more money. And that's what investing is all about. It's all about the ability to compound your money over time, and I would hope in 5 years' time, we're still on that journey with some of these great businesses, compounding our investors' wealth. And I would say that's just a point on a journey that will be a journey in 10 years and 15 years from today. But exactly what that's going to be in 5 years will a bit depend on markets and other things. So I don't have a particular number, but I have a journey in my mind.
Okay, well, look, we've only got about 30 seconds, so I thought I'd ask you 2 quick questions. Your biggest regret?
My biggest regret would, the 2 biggest investment regrets would be that misreading a Tesco and Kraft Heinz. We've got a big position in Kraft Heinz. If anyone noticed, it didn't go well this year. And we got overconfident in sort of the 3G management capability there. What's the greatest achievement? I think, like most people in this room, it's your family. It's not about making money or anything. It's about your kids, and it's about the journey that they're on, and it's about things that you can do as a parent. And I said, actually, at my 50th, when I was speaking, I was really speaking to my kids. I was speaking to everyone there, but I was speaking to the kids, and someone asked, well, what do you want to be remembered for? And I just said a very simple thing, that at the end of the day, you want to be remembered by your kids that they were great parents. You know, it's not about getting remembered about how much money you make or anything else, or having your names on buildings or anything else. I think it's the job you do with your kids is the most important thing.
Well, I fully agree, and I think that this is why I love what Jeff Wilson is doing with what's in this room at the moment. The amount of help that is given to people who need it, who are living in Australia, who, you know, either can't get help or just for some reason or other need help from charities. I think it's a wonderful thing. So thanks, Hamish, today, and we wish you greater prosperity in the future.
Thanks,
and
Tony.
all your members. Thank you.